Have you ever heard the term human life value or even know what that means? Well, by the end of this video, I'll explain exactly what it means, but more importantly, why it's so important. Welcome back to Navigate Your Wealth. My name is Karen Stawicki. For the best advice on how to use both life insurance and annuities to create a successful retirement, subscribe to our channel and click the notifications bell so that you can be notified every time we upload a new video. Human life value. Okay, what is that? Basically, it's the present value of all of the future earnings that you would expect to create for your family over your lifetime. So how do they calculate that? Well, basically they take just exactly what I said. Your current earnings this year multiplied by the number of years you would expect to work, and then they factor in a discount and an inflation factor, and that is what's called human life value. Now, interestingly enough, insurance companies use a similar calculation to determine how much life insurance you can qualify for. So if you are between 20 and 40 years old, typically the calculation is 20 times earnings. If you're between 40 and 50 years old, it's about 15 times your earnings. And then when you're 60 and above, it's typically 10 times earnings. And at that point, they will usually factor in 1 times net worth. So that's actually how the insurance company comes up with what they consider to be your human life value. Leave a comment in the section below and let us know if you've ever heard the term human life value before. Also, after this video, check out our next video, Life Insurance. How do I get it? When do I need it? To make sure that you are properly protecting your human life value. So why is this multiplying factor so important? Well, it's interesting. You need to understand that the insurance company is not the bad guy. In fact, they're actually the good guy, because they're going to come alongside your family when you're gone. If you're gone, so is your income. And the insurance company's job is to replace the income lost. And that's why they do the human life value calculation. But it's also important to note that the insurance company is never in the business of putting anyone's life at risk, meaning you can't be worth more dead than alive. Let me explain. If you want a $2 million life insurance policy and you're 20 years old and only make $20,000 a year, you're not getting a $2 million life insurance policy. And the reason is because you'd be worth more dead than alive. You see, the factor at that point, if you're 20 years old and make $20,000 a year, would be 20 times earnings. So $400,000 is the maximum that you could qualify for. It's really very simple. So when you're doing the math and you're saying, let's see, I make $100,000 a year and I'm 30 years old, sorry, then that would be 20 times earnings, which would be $2 million. I know it sounds like a lot of money, but it's really not. It's just the exact amount that your family will need if something happens to you. Okay, let me see if I can wrap this video up telling you a little story that maybe will help put this human life value thing in perspective for you. Let's assume for a moment that I have a couple in their 30s who have come to my office for the first time. They're married, he's the breadwinner, she's a stay-at-home mom, and they have 2 beautiful children, a boy and a girl. He makes about $100,000 a year, and as I'm looking over some of the things that they currently have in place, I noticed that they have a $250,000 life insurance policy. And I asked them, how did you come to decide that $250,000 was the right number? And they look at each other and think, well, it'll pay off the mortgage, which is what I hear a lot. Okay. So what I want to do is I want to take them through a little story while they're sitting there, just so that they can really feel the impact of whether or not that $250,000 is enough. So I tell them, okay, let's pretend for a moment that you leave this meeting and as you're driving home, you go through an intersection, which you have the right of way to, and a beer truck comes barreling through a red light and hits the car. Unfortunately, sir, you're dead. Your wife is alive and devastated, obviously. Of course, the first thing that we're going to want to do is hire a personal injury attorney, after, of course, we mourn your loss. So we hire the personal injury attorney, and let me just ask you, how much should we sue for? By the way, we found out that the beer truck driver had been sampling his wares, so they're clearly at fault. So I asked the husband and the wife this question, and he looks at her and says, I don't know, a lot. And I said, well, put a number to a lot. And he says, 5 million. I said, all right, we'll go with 5 million. So now we go back to my story, and we take the wife and the children and the personal injury attorney, along with several boxes of tissue, into the courtroom, and he begins. He begins to talk about the loss that this family will experience, both in the near term and over the long term. Human life value certainly is part of that conversation, but also they're going to talk about the fact that this man no longer will have the opportunity to be the coach for the kids' sports teams. And most importantly, this man will not be the one walking their daughter down the aisle on her wedding day. The court is broken up. The jury finally comes to a decision after deliberation. They hand the judge the piece of paper. He looks at it, looks at them, thanks them for their time, and then looks straight at your wife and says the following. Ma'am, while I certainly agree with the jury's decision to award your family $4.5 million, I'm afraid I can't do that. You see, when your husband was in a lucid state of mind, he valued his life at $250,000. Now, the good news is they can't do that. But during that pause, after I said what the judge said, made you think, in fact, it probably got you angry and said, what the heck? That can't happen. But I think it's worth considering, and at this point, I look at the couple sitting at my desk, and my table, and I say, think about this. If you choke on a chicken bone at lunch tomorrow, $250,000 is going to be enough to take care of your family. So you thought. But if someone with deep pockets runs through a red light and takes you out, you said you wanted your family to have $5 million. So what's the right number? If you want to find out what your human life value is and what that right number is for your family, click on the link to apply to become our client. As always, thanks for watching, and if you enjoyed this video, please share it with a friend and give us a thumbs up. And remember, if what you thought to be true turned out not to be, when would you want to know it?